Hi everyone. Today we're going to be looking at the bond market, the US 10-year future. This is going to be a longer term analysis ranging from 1992 to 2010. We shall be using a monthly bar chart and quoting all prices in 30 seconds, as is the convention in the US Treasury market. Since the early 90s, we can draw a multitude of different trend channels lasting between 1 and 3 years, the most recent one being the bear channel originating from the December 08 record high. However, the channel that overshadows all the others is the longer-term one connecting the October 93, June 03, and the December 08 highs, and which currently lies at 132.26, while its corresponding lower boundary provides key support at 108.25. The preferred wave count calls for a series of ABC sequences to have originated at the November 94 low, with the first three-wave pattern topping in October 98 in wave W, while the second zigzag culminated in June 03 in wave Y. It is believed that we're still in the process of finishing the last three-wave sequence, of which wave A should be the record 130.25 high, wave B might be the 114.08 low mid in June 09, implying one last push to new highs in wave C to complete this triple zigzag in wave Z. The reason why I believe this bull market isn't over yet is because we can count 5 clear waves from June 06 to December 08, just as we can count 5 clear waves between January 2000 and November 01 in wave A, which in turn led to a small correction in wave B, and a rally to new interim highs to the June 03 top in wave C. The alternate wave count suggests that we have finished this whole bull market at the December 08 record high, and that we're now reversing these ABC sequences to the downside, of which wave A might be finished at the 114.08 low of June 09, wave B might be complete at 121.21 at the November 09 high, meaning that the next big move should be down in wave C to complete this first zigzag in wave W. This bearish outlook could be further strengthened by the potential head and shoulders pattern unfolding from the March 08 interim high, just as we saw a very bullish inverse head and shoulders pattern form from 1992 to 1997. The head and shoulders neckline currently lies at 115.06, but before getting really bearish, I would wait for a break below the June 09 low made at 114.08, as it represents nearly 38.2% of this entire bull market, and more importantly, it's exactly 61.8% of the rise between June 06 and the record 130.25 high. A drop below 114.08 would signal a test of 110.11, 109.18, respectively 76.4% of the aforementioned rally, and the 50% retracement mark of this bull market between 1994 and 2008. Next up would be the all-important channel support line at 108.25, a break of which would interrupt the longer-term bull trend and call for tests of 104.01, 104.17, the latter being the 61.8% retracement mark, and we have a double bottom at 104.01 and 104.04 made in June 06 and June 07. Further losses below that zone would set the focus on the 76.4 retracement at 98.11 and 93.28, the trend line joining the triple bottom made in 96, 97, and January 2000. Coming back to the bullish interpretation, we will first need to break the recent November 09 high at 121.21, in which case we can test retracement resistances at 124.15, which is 61.8% of the recent drop from the record high, and 126.28, which is a 76.4 retracement mark. We may then test that record 130.25 high and 131.13, where the rise from the June 06 104.01 low is equal to wave Y, which went from January 2000 to June 2003. Next up would be the all-important long-term channel resistance line, currently at 132.26, an upside break of which would signal further gains to 136.25, where the rally from that same June 06 low will be 100% of the progression between November 94 and June 2003, basically waves W2Y, and finally 141 even, another 100% extension target but measured from the June 09 low, where wave C would equal wave A to terminate wave Z in this triple zigzag. The bottom line is that the US 10-year future remains bullish in the long term as long as channel support holds at 108.25, and we also have major nearby support at 114.08, which corresponds to the June 09 low. We shall go into more detail in an upcoming medium-term clip to see whether we can expect a rally to new highs anytime soon, but until then, good luck to all, and talk to you soon on Finomics.com.